Let's start with Massmart. Okay, so we know this group, of course, it trades as Macro, Game, Dion Wired, and all of those sorts of division, Cambridge and CBW as well. But as far as this conversation is concerned, they've got a very, very successful division called Mass Build, which includes Builders Warehouse. I don't know how many of those stores there are, but there are a good number across the country, and they operate typically in well-heeled, well-to-do areas where there's a large young population. There's also a division in there called Builders Express, which is a little bit more oriented towards the mini contractors, the bucky builders. Remember, the overall Massmart group now is 51% held by Walmart, the world's largest retail group out of the United States of America. It has been a bit of a rocky ride, though, since they invested. Not in the division we're talking about today, but in the overall group. The market cap has sort of stagnated at around 32.5 billion rands. Price to earnings ratio is still relatively high at 29. All the retailers are fairly high. Dividend yield 2.81. So, Gary, I mean, I would have certainly expected this group to have done a little bit better since the Walmart introduction, because I thought great things were going to happen like immediately. Maybe change the name to Walmart and come out guns blazing.
Now, I think the whole Walmartization of Massmart has been a little bit disappointing for everyone. Everyone bought into the hype of, you know, we're suddenly going to get all this huge buying power from Walmart. Yep. It's going to be a big rebrand, and it hasn't come through. But I mean, I think the group itself, if we're looking specifically at Mass Build, I mean, is doing very well. I mean, it's one of the stronger in the sector.
Sequential sales increases 15% plus, 100%. No problem.
Definitely, and that's something that I've looked at across all these groups. I mean, we run an 18-factor quant ranking model where it actually ranks each of the separate groups. I mean, out of the 5 companies we're going to talk about today, we've got 2 in the top 10, and that's out of the whole all-share index, and one that comes in at 11. So this is a very exciting sector. Mass Build, I think, is one of the more exciting components in the sector as well. I mean, it's one of the few that is growing, headline earnings, or at least growing sales. Low double digits. I think they came in with 14% sales growth in their year-end numbers, and that's pretty good for the sector, which is operating in a difficult environment.
But it's sort of overwhelmed by the big Game and other divisions which are not currently doing all that well. I think Macro still performs relatively well. So that becomes a bit tricky. Let's have a look at the share price chart over 5 years. You can take us through that. So you can see quite a nice run up when everybody's doing well in 2012, 2013. Then 2014, not so good. The micro lenders are getting hit. Everybody's worried about the state of the consumer. Bit of a recovery late last year. This year looking quite good. Then we have the tax increases and the petrol price hikes and the rand falling out of bed. So I don't know. It's sort of drifting around 150 at the moment.
It's difficult because, I mean, it's also, you've got to consider it's trading on a multiple of 29, which is expensive in the sector. I mean, the other companies we think are probably offering a lot better value, while operationally Massmart is very good. You know, that sell-off now, I mean, it's interesting that you highlight petrol prices. That's something that was very prevalent in their results, because I think, you know, Massmart obviously, you know, chatting to Walmart, trying to sell the dream that we are your springboard into Africa. This is why you bought us. And them saying, you know, with a lower oil price environment, some of these African economies that we were planning on going into now suddenly don't look like the greatest investment for us. So that may be putting a bit of a hamper on growth as well.
So what you're implying is the sort of West African pitch, Angola, Ghana, Nigeria, a little bit of caution there because of the impact of lower oil prices on the fiscal balances in those countries.
Exactly.
What about management changes? So we saw Guy Hayward coming to the fore once Grant Patterson stepped down. Ilan Zwarenstein, the CFO, has just announced he's moving, but he's been replaced. I mean, I suppose this is a group with a deep bench, and the Bentonville guys from Walmart will always make sure that they sort of have a steady succession plan.
Yeah, I think you're 100% right there. And I think it's also that parent and that corporate backing that Mass Build has, that perhaps some of the other ones we're going to look at don't have. I mean, Massmart will have very deep pockets if the sector is very cyclical. So if we do go into another downturn where, you know, the consumer, and I mean, remember, Massmart's consumers, especially the Builders Express and Builders Warehouse, they're high LSM consumers. They're in rich areas that you know, can cater to, you know, like renovations, etc. It's not quite the cash build story.
One final point. I have criticized the group in the past for the way that they report their results, and I know it's a nuanced thing. What they do is they take a revaluation related to loans to African subsidiaries, and they allow it to come through on the headline earnings line, and they put it out there into the media, and they say, oh, well, you know, trading's sort of fine, but we've got earnings down 10%. I keep saying to them, draw the attention of the market to the underlying normalized headline earnings and take that stuff out. But they don't seem to be too worried about that. And my theory anyway is that that's why the market price sort of bounds around, because nobody likes to hear headline earnings declines at a time when they thought the sector was doing better. But maybe I'm wrong. Maybe the institutional investors are cleverer than us and they sort of see through these things.
I hope so. I mean, I don't have a problem with Massmart's reporting. I think their segmental breakdown is normally in a lot of detail. I mean, they'll take their 4 operational divisions. For me, they give you a lot of insight. And I mean, if you look at a fund like Coronation's Balance Fund, we worked out the other day, for them to unwind their whole position, they have to do 20% of the market volume every day for a year. So I mean, these are the guys that I think are really going to move the share price into those long trends that you're seeing. And for them, I mean, I don't think they're going to be shocked just by the numbers.
Okay, it's time to go hot or not. Clearly, we have the backup of the world's largest group. The Africa thing may be going a bit slowly. It's a good long-term story. This is Africa. There's retail. But is it hot at a 29p at 150 Rand? How are you going to call it?
Like I said, I like the group operationally. If we look at that quant ranking model, it actually comes in at 108. So it's one of the lowest in the sector. And it's you know, for me, that it's just a valuation thing. It's run a little bit ahead of itself. We need to see a little bit stronger earnings coming through before we're going to buy it.
So you're going to call it not hot?
I'm going to call it not hot for today.
Good. That's the same analysis I would have arrived at.